What's going on YouTube? I'm Evan, this is Marksman Trading, and welcome to my channel. Today is January 31st, and unfortunately it's another solid red day. We're closing the month out red. And so yeah, this recap isn't going to be the traditional recap where I review all my trades. The reason for that is because knowing myself as a trader, it's easy for me to take the tilt, or it's easy for me to take the losses of like today into the next day and the rest of the week. And I've already reviewed my trades and logged my progress for today and like figured out what I did wrong. And I don't want to make a video on it because I want to, not carry the losses into tomorrow and go on tilt for the rest of the week. Instead, this video will showcase my mentor explaining to me how to scale in and scale out of trades. So as you guys know, I trade with I don't scale in, just one lot in, one lot out usually. But I've been struggling lately, with my trading. And a lot of times I'm right with the idea, but just bad timing, as my mentor explains in the rest of the video, as you'll see. And so he pointed out that, scaling in and scaling out might be super beneficial and might work better with this edge that I'm currently using. And so, yeah, I just, for one, there's great content in the rest of this video because my mentor, so my mentor is the Honored Trader on YouTube. Check his channel out. Great content. He's been trading since 2016, consistently profitable. I wouldn't be where I am today without him and the rest of the trading group that I trade with. So yeah, so for one, just great content, learning how to scale and scale out. He learned from Nate from Investors Underground, so a lot of good content in there. And secondly, I think this is just a part of every trader's journey that isn't really showcased too much on YouTube. I don't think YouTubers show themselves reviewing their edge and having like a mentor kind of like teach them and just review all that. I don't think that's shown too much. So I want to be transparent and show this side of trading that not too many people really see, and just the importance of it, right? Because if you're a newer trader, you need to find like a trading community and find a mentor. Not only do they help you grow your trading, right, and show you what you did right, what you did wrong, and just have like good discussions, but also encourage you in the harder times, like trading slumps. Like I've been trading for 3 years, still not profitable, right? So like weeks like this where I've had constant like max loss days, they're also just there for encouragement. They've been in the same boat that I've been in. So yeah, trading can be very emotional, and it's easy to kind of like beat yourself up over it. But just having someone else there to encourage you, and just help you out, it's super beneficial. I found my trading community, so shout out to LMD Trading. He started this community, great channel. You guys should check him out as well. So I found him through a live streamer on YouTube, Relentless Trader. We used to talk in like the live chat every single day, and then he created a YouTube channel and a Discord. So I encourage you guys to do the same. There's a bunch of like traders out there that live stream, whether that's commodities like gold, or that's crypto, or futures, or stocks, or forex. Find these people, join the live chat, talk with them every single day, get to know people, ask questions, and just like form a community, people that you can trust, and just find yourself a mentor that knows what he's doing, and that's just gonna and willing to help you, and that's going to really like propel your trading career. Yeah, so that's about it. The rest of the video is just going to have my show my mentor kind of like talk me through how to scale in and scale out, and just I just wanted to stress like the benefits of finding a trading community and a mentor. And yeah, also just great info on how to scale in and scale out of trades. All right, guys, peace.
Because you're not wrong on these trades. You're wrong on the time aspect of it. And, that's the hard part, right? That's the hard part in trading, is making sure the timing is right. But that's when starters help. And I know it's so complicated, especially in the beginning, to put starters on and stuff like that. It's really, really complicated, because it's like, when do you add to the starter? When do you, so on and so forth. And sometimes you don't get to add on the starter. But not adding on that starter means that you also have very small risk on your trade. So it kind of like, starters are kind of like, they're good and bad at the same time. You just have to know how to use it. I know you don't want to, I want to say you don't want to learn how to use starters. I know that you're not interested yet in putting on starters because you kind of don't know how.
Yeah, I tried
Or
for
when.
a while, I think, like a year or two ago.
Mhm.
And it was like super difficult. But yeah, I might have to try that again and just.
I think you need to let time. like when you have the right thesis, which I'm noticing you have the right thoughts, you just have the wrong time on them. You need to put yourself in a position where it's less about the art and more about the management of the trade. And I learned that from Sang Lucci recently. He says he said this 16 hours ago. It's funny how experienced traders think about trades as something to be managed, worked, hedged, played with. They're way more flexible. Let's see where this goes mentality. New traders are rigid. It's either profitable or not, in or out, green or red.
Oh, that's actually a really good point. Yeah, it's definitely where I'm at right now.
You see how simplistic it sounds when instead of but then you have to size it accordingly, right? You have to make sure when you're trading, you're putting yourself in a position where you can let something go against you within a range, right? You still need to have a stop on a starter. That's where I failed at with starters. Is I would put like no stop on it. So and then I'll get caught for a big loss. But you're already good with risk management. So it's like for you, I think you just need to build into your position. I think you need to find a range, maybe a 20 cent range of or a 30 cent, depending on the stock, where you're willing to just have an order in at this range. At the top end, you want to add the bottom end. If it fails to follow through, you want to add into that and scale out as it moves in your favor. You're 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 so focused on this green red RR when in your case it might be best to focus on managing the trade because like let's say hypothetically speaking right now you're trading with 10 shares. Let's say you start in a position with like 2 shares. You're able to give it so much more lead room. It gets to the top end of where you would like to add, and maybe you add a little bit more and you have a clear stop out. Maybe you add four up to 4 shares at the top end of it, and then it comes down, it fails to follow through, and maybe you can add another two on the bottom of that range. Now you have 6 shares. Now, or do you have the full 10? No, but you've allowed yourself to manage a position rather than it being so cut and dry of red and green.
Right, that's
So
true.
here's my thought. Here's what I would recommend. I would say try the scaling approach. Give it another shot. But I'm gonna say scale 3 shares. Do 3 shares on each position. It doesn't matter. It does not matter if it's Nvidia or I mean if it's something relatively expensive, right? Maybe 2 shares or something. I don't know how you want
Right.
to break that down because I don't know what you're trading Nvidia with now. But let's say you trade in Nvidia, right? 3 shares. You give yourself a 30 to 40 cent range, and you build that range. So we're looking at AMD, right?
Right.
Where did you get short at?
So I shorted it. So I saw it move up and then kind of consolidated and then flush below 167.25. So I got short at 958 at 167.30.
958
Yeah,
and
167.30.
167.30. Okay. So if you were to go ahead and size in accordingly, right? Let's say hypothetically speaking, right? You size in with the thoughts that this trade could possibly try to get to previous day's low, right? So let's say you're like, okay, I want to put on a quarter size. So you put on 2 shares. Say 2 shares. How many shares did you trade with?
Yeah, so actually I have it pulled up in my calculator. So full size was 6, but a starter size would have been one share.
Okay. So let's
And
say
that's
you
about
put 1 share. Okay,
15%.
that's fine. Let's say you wanted short 1 share. You're gonna now build a range. What you're gonna do is you're gonna put a starter here with the assumption that AMD might want to retest previous day's low. So you want to build into that test, right? So it surges up. You don't have to be perfect. We're not going to be perfect here. So
Right.
let's say it kind of like rejects and you start getting in on the rejection of 1004. Let's say you're like, all right, now it just failed previous day's low. It failed trying to get up there. It failed the higher day break. I get in and it's at 168.37. It now confirmed the thesis that we're not going to get above previous day lows. That's confirmation, right? Look at that wick. That wick is confirmation.
Right, right.
So now, if you said you're going to build in 6 shares, right? That's
Yeah,
what it
yeah.
would have
Full
been.
size would have been 6. From where
Okay.
I entered, so I could enter even probably some more because my stop loss would be a bit tighter.
Okay. Exactly. So let's say hypothetically speaking, you jump in with another 2 shares. You're half size now, right? It comes down, right? It pops back up. It went down kind of to your initial entry, got soaked, came back right back up. Lower high, failed to follow through. The moment it now fails your initial move, you add that 1 share on. Your starter was 1 share. You picked up what, two or three? What did I say? Three or two?
Uh, 2 or 3, something like that. I forgot which one.
Okay, so let's just say because you're trying to get 6 shares. So let's say you had one, you got two, and now you added one. You're gonna have 4 shares. You're not gonna have your full lot size, but now you're in on a confirmation move, and it's going down to VWAP, pops right back up to your entry again, pops right back up to that 167.36, fails to follow through, and it never kind of looked back. And wherever you want to go ahead and take profits is where you could. It's managing the trade. This is what I think you need to do, because the way that you're trading, you're right, but the timing is off almost every time.
Right, right, for sure.
The only time that I think that you go into a trade and you have to let it kind of be an all, on all in one size in one, is when it does that A plus setup that you like. Where it soaks, it flushes under lows, soaks right back up and goes. That you size, because that's an A plus setup. So you size in off rip. That's because that's your A plus. You're not gonna put a starter on that. You're gonna go in on that.
Right, because I got the stats that kind of back that.
Exactly. So just try downsize tomorrow, right? And work with me tomorrow. Like, work with me. Like, if you're gonna scale, right? Let me let me know. So say out loud, I want to play in between these ranges. Know where your stop is gonna be. Because you always want to have that stop, but you're gonna give yourself a little bit more leeway on that starter. Don't put your stop so tight where it's like you're on a full size position. That's not what you're doing. You want to give it that, like this one, it had clear risk, right? Previous day lows on AMD is clear risk,
Right,
right?
right.
We can agree.
Yeah.
So when you got stopped out at 88, what the fuck was the point? It
Yeah,
didn't even.
yeah, I had my stop loss because of the intraday high of day, but you're right.
No, I know
I playing the
exactly,
levels instead of just like the price action. It should have been like
exactly.
above that.
So instead of being so cut and dry, red and green, try managing the position and do it on smaller size. So now you're going to be losing even smaller. So you're not going to be bent out of shape when you're wrong. If you're doing 3 shares, you're not going to be mad. You're not going to, it's not going to be affecting, because this is something new that you're going to learn. But I think this might be beneficial for you, because I think that the way that you trade, you need time. You need
Right,
time in your trades. You can't, because your time is what's making you wrong. Your trade isn't making you wrong. It's the time that you're getting in the trades that's making you wrong.
right, right. That's true. Yeah, because yeah,
So
both days, today and yesterday, both AMD, I got stopped out trying to short like a lower high
me
or
too.
something,
Yeah.
and then immediately right afterwards it worked.
Yeah. Exactly. So I think try that out, man. I do. I think try putting on the starters. 3 shares. I don't care what you're trading. 3 shares, maybe 4 shares, depending on the size. But let it be something irrelevant. Let it be something where if you're losing because you're trying something new, because I'm not expecting you to grasp how to trade with starters off the rip. I'm not expecting you to grasp it off the rip. But what I am expecting you to grasp is, one, holding a trade longer, and two, managing it better.
Right, right.
It's not right now. Don't let it be, I'm red today, I'm green today. Don't let it be that cut and dry. Let it be, I managed my trade well today and I stopped out because it hit the top end of my range after I got like a nice little scale in, and it just didn't work. You know, and let it be that, instead of just, because you're going to be learning now. This is going to be a different way of trading rather than a one shot entry.